When we got your request to look into Palantir Technologies,
Yeah.
um, I got to say, pretty interesting stuff. They're not your typical tech company, right? It's not
Yeah.
social media apps or anything like that.
No, not at all.
This is software, but for like intelligence agencies,
Yeah.
for the military.
Exactly.
Like, we're talking real deal spy tech here,
Mhm.
meeting some really old school needs. And a lot of you have been asking, so is Palantir stock worth it?
It's a really good question. I think a lot of investors are asking that right now, particularly with some of their recent moves. But to understand that, I think we need to go a little bit deeper, not just what they do, but who they do it for. Because when you're talking about government agencies that are dealing with national security,
Right.
it really adds a whole other layer of complexity and opportunity, frankly.
It's true. It's not just selling software licenses at that point. It's embedding yourself in these, like you said, very complex, really high-stakes systems. And speaking of their offerings, they've got these three main products: Gotham, Foundry, and Apollo. Those names can be a little, I don't know,
A little cryptic.
a little bit, yeah. So what are we really talking about here?
So think about it this way. If you're trying to track, let's say, illicit funds through this shadowy network of shell corporations, that's where something like Gotham comes in.
Okay.
It sifts through these massive amounts of data, financial records, communications, even social media activity. It helps investigators kind of connect those dots and follow that money trail. Now, I'm simplifying it, but it gives you a sense of the power behind these tools.
Yeah, it's definitely not like which cat video is trending this week or whatever.
Right, exactly.
So then there's Foundry.
Yeah.
What is that? Like some kind of magical data forge, it sounds like.
Kind of, yeah. Imagine a massive organization, maybe a global supply chain or a government agency, and they've got data coming from a million different sources.
Right. Spreadsheets.
Spreadsheets, databases, reports, you name it. Foundry takes all of that and pulls it all together, creates a single, coherent view. It's like solving a million-piece jigsaw puzzle in an instant.
Wow. So they're bringing clarity to chaos,
Exactly.
which honestly, in today's world, feels like a pretty valuable service.
It is a very valuable service.
And then there's this Apollo. There's a theme here with these names I'm sensing. What is that about?
Well, Apollo is all about making sure that this very complex ecosystem of software operates across different systems, different environments. Think of it as the conductor of an orchestra, making sure every instrument is in sync.
Okay.
That's crucial when you're dealing with really mission-critical applications
Right.
where downtime, any glitches can have huge consequences.
So we've established they're tackling complex problems. Their clients are some of the most, really the most powerful organizations out there. And this technology is, well, it's impressive. So does that translate to some serious financial gain?
It does. We're talking about a company that has gone from $742.56 million in revenue in 2018 to a staggering $2.33 billion recently. That's huge growth, almost unheard of in an area like government contracting, where things move slowly.
So they're clearly doing something right. But here's what I want to know, because past performance isn't everything, especially in the tech world. So as an investor, what does this mean for me?
And that's where it gets a little bit tricky, and we have to look a little bit deeper into the financials, right? Because while that revenue growth is impressive, the market has taken notice.
Okay.
And that's reflected in their price-to-earnings ratio. It currently sits at about 186.8.
Okay, so for those of us who don't work on Wall Street,
Right.
what does that mean?
Basically, what that means is that investors are already pricing in a lot of future growth. Imagine paying a really high price for a startup because you think it'll be the next Google or Amazon. The potential's there, but so is the risk.
It's a gamble then.
Yeah.
So as investors, if we're really looking at this, what can justify that kind of price tag?
Yeah.
What are the red flags?
Well, and that's where I think the big wild card comes in. Artificial intelligence.
Oh, yeah. AI. It's everywhere now. But what's Palantir doing in that space?
Well, they've really doubled down on building out their AI platform. They call it AIP.
Okay. What's so special about it? There's a lot of AI platforms.
And this is where that deep experience with government and defense really comes in handy. Because when you think about the type of data these sectors work with, it's very specific.
Right. Highly confidential.
It's complex, it's sensitive, it needs very specific security and privacy protocols.
You're not going to just put it on some random AI generator.
Exactly. You can't just throw it into ChatGPT and hope for the best. Palantir's got that experience building secure and reliable systems, and that's huge for their clients.
So it's not just we made an AI. It's the whole package of we made an AI that can handle this kind of data.
Precisely. And this is important for any investor, the AI world is very competitive. You've got Google and Microsoft pouring billions into it, and then all these new startups.
So even if Palantir's ahead in some areas,
Yeah,
it's not guaranteed they're going to be the king of AI.
exactly. And for an investor, it's about looking at how Palantir does AI and those specific markets and asking, is this an advantage? And can they keep that advantage?
That's a lot to think about. Okay, so growth we've got, AI we're looking at.
Mhm.
But are the fundamentals there? Is this a financially sound company or is it all hype?
Let's look at the numbers. One of the first things you notice is their cash on hand, $3.65 billion in cash and equivalents.
That's pretty good.
It's a very comfortable cushion, especially in these uncertain times.
You need that.
It gives them flexibility, research, maybe buying up another company or riding out a recession. They're not desperate for money.
Okay, and debt. Big concern.
Surprisingly low, actually. Always a good sign.
Okay.
Means they haven't borrowed too much to get where they are.
So on the surface, they seem pretty solid, but I'm remembering that price-to-earnings ratio. Does that throw up any red flags?
It's something to consider for sure. That high valuation means the market has high hopes for Palantir.
So they need to have big earnings to make it make sense.
Exactly. If those big earnings don't happen, or even if the mood about the company changes, that stock price could really swing.
So high risk, high reward, like they say.
Yeah.
At least you want to do your research. What are the experts saying about them?
It's interesting. A lot of analysts are saying hold with a 12-month price target of $21.96.
Hold always feels like they're not sure.
Right.
What does that tell me as an investor?
It means be careful. They're not saying sell, but they're also not saying buy more now.
So it's wait and see. Can Palantir do what everyone expects?
Right. Can they keep up the strong earnings and stay competitive, especially with AI changing so fast?
It's like watching one of those high-stakes poker games. Everyone's put their money in, but we haven't seen the last card yet. And you know what I always find interesting? Insider trading.
Yeah.
What are the people on the inside doing with their stock?
Always an important sign. With Palantir, we've seen the number of shares go up about 8.24% year over year.
Isn't that a bad thing? Like making more slices of the pie. Doesn't that make my slice smaller?
It's possible and something to keep an eye on, but it's not always negative. Sometimes companies do it to raise money for expansion, maybe buying another company. That helps in the long run.
Right. So not panic time, but definitely worth noting.
Absolutely. And it's worth looking at other insider trading patterns too. Like insider ownership is sitting at 5.2% right now.
What does that mean?
Well, even with more shares out there, the people who know the company best are holding on to theirs.
So they're not running for the door. That says something.
It does. It's like a vote of confidence for the future. But, and this is interesting, there haven't been any big insider buys in the last 90 days.
No one's rushing to buy more either, huh?
So even the insiders aren't saying, no, it's the perfect time to buy.
It's all very interesting, if complicated. Palantir is definitely a unique opportunity. So they've got the growth, AI's in the mix, but what about their financial health overall? Are we talking about a solid company or is it all hype?
Well, if we look at the numbers, one thing jumps out their cash situation. They've got a good $3.65 billion in cash and cash equivalents.
That's a decent amount, especially these days.
It is. It gives them breathing room. They can invest in R&D, maybe acquire another company, or even if there's a downturn, they're not scrambling.
Makes sense. And what about debt? Is that a concern?
Not really, no. It's actually quite low, which is always reassuring for an investor.
Okay.
They haven't over-leveraged themselves to get to this point.
So on paper, pretty good.
Hmm.
But I'm thinking back to that price-to-earnings ratio. Any red flags there?
It's something investors need to think about. That high valuation, it means the market expects big things from Palantir, and soon.
They've got to have the earnings to back it up.
Exactly. And if those earnings don't show up, or even if the sentiment around the company changes, that stock price could become very volatile.
High risk, high reward. You really need to know what you're getting into. What's the word on the street then? What are the analysts saying?
It's interesting. The general consensus seems to be a hold rating with a 12-month price target of $21.96.
Hold. Always feels a bit like they're on the fence. What does that tell me as an investor, really?
I'd say it suggests some caution. They're not saying sell, but they're not exactly saying buy more either.
So wait and see. Can Palantir deliver?
Exactly. Can they keep those strong earnings coming and stay ahead of the curve, especially with AI changing so rapidly?
It's a high-stakes game, that's for sure. And one thing I always find telling is insider trading. What are the people on the inside doing with their stock?
Always an important thing to consider. In Palantir's case, we've seen the number of shares outstanding increase by about 8.24% year over year.
Isn't that not great? Like slicing the pie into smaller pieces.
It's a possibility. Definitely something to monitor, but it's not always bad. Sometimes it's to raise capital, maybe for expansion, acquisitions, things that are good long term.
Right, right. So not necessarily panic-inducing, but good to know.
Absolutely. And other insider trading patterns are worth looking at too. Insider ownership, for example, is currently sitting at 5.20%.
Okay, and that tells us what?
It means that even with more shares out there, those with the inside track are holding on to theirs.
So they're not jumping ship, which is a decent sign.
It suggests a degree of confidence in the company's future, at least. However, and this is worth noting, there haven't been any major insider buys in the last 90 days either.
So no one's rushing to buy more right now. Interesting.
It might indicate that even those closest to the company don't see a screaming buy opportunity at the moment.
It all paints a very well multifaceted picture of Palantir as an investment, that's for sure. It's kind of like we're putting together a puzzle, but someone keeps swapping out the picture on the box.
I like that analogy because with Palantir, it's not just about do I like this company, it's do I like where I think the world's going. Their technology is a big part of some huge trends: data, AI, government surveillance, even war.
And that just adds a whole other layer to deciding if you want to invest.
Yeah.
It's not just will I make money, it's what kind of future am I supporting with this?
Exactly. It's got to match up with your values, what you believe about how tech should be used in the world.
So for someone listening to us right now, trying to wrap their head around all this, what's the bottom line? What's the one thing you want them to remember?
Investing in a company like Palantir, it's not simple. There's no right answer, no guarantees. You really need to understand not just their finances or their tech, but the bigger picture, the whole landscape of these industries.
So do your research, read their stuff, follow the news, but also, maybe even more importantly, think about how comfortable you are with what they're doing, what it all means.
It's your money at the end of the day. You need to be okay with the risks and where you think this is all headed.
Absolutely. And if you really want to go deep, check out Palantir's investor relations site.
It's got tons of info, SEC filings, their leadership team, even presentations. It's all there if you're willing to dig.
And don't forget to keep up with the industries they're in, what's happening with AI, with data analytics, with defense and intelligence.
Knowledge is power, right? Especially when it comes to making smart investments.
For sure. Well, that wraps up our deep dive into Palantir Technologies. I hope this has given everyone a lot to think about.
Always remember, investing has risks. Do your homework, talk to a financial advisor if you need to, and be prepared for any outcome.
And the most important thing, never stop learning. Until next time, happy investing, everyone.